Hello, everyone. I hope that you are doing well. Welcome to the second real webinar by Rich the Bull. Rich and I were just speaking about this webinar, and there was so much demand for this that we needed to make it happen. And Rich just literally said to me that if you do not understand the complex things within our understanding of price action, then this webinar will literally solve it all. So you better buckle up, get your notepads out, because this is going to be a very exclusive webinar. Let's dive in. Are you excited, Rich?
Yeah, mate, let's do this.
Yeah, this will be fun, man.
Sound. So, what I was thinking was, mate, to start with the unicorn model. Now, as you already know, on social media, YouTube, Twitter, there's that many different people showcasing the unicorn and bragging they know what the unicorn is and how it works and all the rest of it. And in actual fact, they haven't got a clue, right? They literally just pattern trade a breaker and a fair value gap, and that's what everybody does. Like, you see it everywhere. I can't act smart because that's something that I did originally, until obviously you pointed out the real unicorn. Some people are going to be questioning the real unicorn, but yeah, the real unicorn, what ICT was actually pointing out. Now, the thing with the unicorn is the same as what we're going to go on to after with the 3 candle model. Both these principles, most people pattern trade them, right? And it's the worst mistake they can do. There's a logic behind everything that we're going to show today, right? And I'm going to try and cover the logic as best as I can without going into too much detail and going over people's heads. So the unicorn, as you've already pointed out, Zeus, in previous videos on YouTube, was from the 2022 model. And I have an image here, and the reason I've got this image is because this particular image is probably one of the most cleanest patterns, we're going to say pattern for now until you understand the logic for the new people, that you will ever come across. For any of you that want to view this in real time, this was from the 2022 model, and this was episode 3. Okay, so episode 3 of the 2022 model. ICT shows a long and a short version of the market maker model using the unicorn models for entries, right? Now, the basics of the unicorn model, or should I reiterate the real unicorn model, is the fact that we have a breaker, right? The breaker is obviously a low, a high, a lower low, and then a higher high, right? And basically, sell side gets taken and buy side gets taken. This is how we recognize a breaker. Okay. So as a pattern, we're going to call it a pattern for now. Okay. What most educators showcase is the fact that we've got a breaker and we've got a fair value gap, and we're waiting for that retest of the fair value gap and the breaker, and this is where we enter, right? Which is okay, and I still do that to this day, only when there's no SIBI on this side or no fair value gap. Okay. Now what's really going on is here, it's not a pattern, it's a logic, it's a complete logic, and I'm going to explain the logic, right? The real unicorn is a breaker inside a SIBI, right? That the SIBI can fold inside the BISI. So for anyone that already follows trading and understands what's going on, it's basically the breaker falls inside a BPR, right? But it's a very specific BPR because we have to be able to pull the fair value gap from the SIBI through the BISI cleanly where possible. The cleaner this model is, the more effective and high probability this model is, right? This is an entry model. This particular one's an entry model, right? The reason I'm reiterating entry model is because later you'll see how we can use this for bias on a higher time frame. This is what a lot of people miss, okay? So the logic behind this is very simple, okay? We watch price print. Price prints a SIBI. We know that by the time this candle finishes printing, okay? Price comes back up and retests the SIBI. Don't forget, we are clearly bearish at this point on this side of the curve, okay? We're bearish. Price comes up, retests the SIBI, completely respects the SIBI, right? We get a clear rejection wick and we respect the SIBI. No one can argue that. Now, two things have already happened here. Firstly, because I've probably already got, or should have, a POI and a key level marked out down here, I'm waiting for a reaction. I'm already anticipating, right? This is a big thing that some of you guys don't do and you need to start doing. I'm anticipating the breaker. So I'm already anticipating now that this could be a breaker. Okay? Price comes down, makes the SIBI, okay? Retests the SIBI, right? Now, when this SIBI holds, we are proving that we are bearish. Okay? Listen carefully. When this candle rejects with this rejection wick and starts to fall away, price starts to fall away, we've proven that this level is holding because we're in a sell program. So therefore, the SIBI is going to hold price. Okay? Price comes lower, hits the POI, hits the key level. We then get a rejection wick on the bottom. Okay? And then when we also get a nice clean CSD with this large engulfing candle here. Okay? This big powerful candle that displaces over the order block. Right? Very basic for some of you, but this is where it starts getting technical. So the logic behind this trade, right, this entry model, is this. As price comes back up, we should respect this level. This level should not get broken. Why should this level not get broken? Because, as Zeus pointed out in his previous videos, right, this now is an intermediate term high. It's an intermediate term high because it formed inside this SIBI and it respected. So this level, if we are bearish, should never get broken again. Okay? So it shouldn't get broken because it's proved that we're bearish. Once this candle, this displacement candle, right, violates, this is the key, violates aggressively, right, this SIBI, now we're in a buy program. This is a proven buy program. Yes, we can use CSD right here, what most people call CSD. For me, this is okay, and yes, I can trade this, and so can many people, right? But this is not high probability right here. The same as the Turtle Super is not high probability, which we'll get into shortly. This is the true CSD right here, this move. Once this move happens, there's two things that have to happen. Okay, we have to close above the breaker, and we have to close above the SIBI. Once this happens, this is confirmation, right? This is a high probability setup. This is the only kind of setup that you should be looking for. Okay, and for those of you that are not profitable, okay, or are on the way from break even to just getting profitable, and for those that are just not even profitable, this is the only entry model you should be looking for. This is it. This is the only one. That's what I advise personally. Okay, This is what I'm currently trading right now. Turtle Soup's out the window, gone, right? Nobody should be teaching Turtle Soup to beginner or even intermediate traders, in my opinion. Okay. This model now. Sorry.
Continue. I wonder, Rich, before you continue.
Yeah.
Do you mind sharing, like, why waiting for that break formation, why waiting for that market structure shift is so powerful?
Yeah, of course.
Does it occur, for example, randomly in price action? Does it occur anywhere in price action, or does it occur only after specific things have occurred?
Good question, mate. So, again, this is why people shouldn't pattern trade this model, because for sure you may see this, if we call it a pattern for now before you understand the logic, they will see this on a leg on the sell side of the curve or on a leg on the buy side of the curve. So what I mean is, in the redistribution, in the distribution, in the accumulation, in the reaccumulation, you can find this happening, right? But this model is very specific, right, to the wicks. And some of you are going to say, well, okay, what do you mean by the wicks? This happens in the wick of an hourly candle that purges or sweeps liquidity every time. Now, what I do want to say is, the unicorn model, I want you to think, I've said this in the previous webinar, okay? The unicorn model, or the true unicorn model, which we're going to call it now, okay? It's like a snowflake, okay? I know what a snowflake looks like. Zeus knows what a snowflake looks like. Everybody knows what a snowflake looks like at first glance. But every single snowflake is slightly different. That's why I'm showing you this particular model right here, because this model is the cleanest one. This is why ICT showed this in the 2022 model. Now, to answer Zeus's question, this model will show itself in every hourly wick, right? And what I mean by every hourly wick is, if we bearish, right, it's going to present itself in the open high wick. If we are bullish, it's going to show itself in the open low wick of the hourly candles. Okay, we'll see examples shortly. The other answer to the question is, mate, what the average person doesn't know, and what all these other educators can't tell you, is that once we have this level here, this BPR, the reason price will not come back down to this, and the reason why, as you can clearly see here on these entry candles, we have clear rejection wicks before price moves off, right? And that is because right here, if I was to draw a line here, okay, there's an algorithmic price level right here that forms. You've already heard me say hundreds of times, this is an algorithmic signature, right, in price. And the reason is, this is what all the other educators can't tell you, because they don't know, they don't understand it. There's an algorithmic level, algorithmic price level right here, okay? And this is a signature that happens every time price comes through that level to sweep or purge, not to close below. There's a big difference. To sweep or purge that level, it comes down here to reprice in some kind of discounted price. Okay, so it comes down to reprice in a discount before going higher. And the algorithm is basically saying, okay, we're in a sell program, okay, as soon as this starts occurring, it's the algorithm saying, okay, We're going to sweep liquidity. We're in a sell program. We're going to change into a buy program shortly. Okay. Then it says, okay, it's aggressively. Look how it's aggressive. It has to be aggressive. Violates this price level. Okay. This SIBI. This breaker. Retests to reprice again on the fractal move, because this is the fractal move of this bigger move, before going higher. And once this happens, this is the trigger.
You just mentioned that we move from a sell program to a buy program, and that we can confirm this. How can we confirm this?
There's multiple ways. The two main ways, okay, one is SMT, for sure. SMT, it's a good question actually, because it's something that I don't normally tell people is this, okay. On a higher time frame, we would have an SMT on a 1 hour or a 4 hour, for example, with this low, right? But you need to listen carefully. I use what I call confirmation SMTs. So on a higher time frame, we would have SMT here, for example, with Nasdaq, which is the most high probability. But then I'll be looking for a confirmation SMT on the lower time frame. I'm only going to say this once, okay? The leg that made the breaker, if we get SMT from this swing low to this swing low, so the leg that made the breaker, SMT with the SMR, this is very, very high probability, like 90%.
And what about the timing aspect?
The timing aspect,
Do you look at this during the midnight, or during specific times of the day?
okay, so time is something that everybody gets super confused with, and I think Zeus, like, you know yourself, because I'm sure you get the same questions. People get, like, how do you say, like, all they think about is time. They try and find some secret method to find time. They try and, you know, use mathematics. They try and do all kinds of things. Using, no disrespect today, but quarterly theory, different cycles, all different kinds of cycles, and all these things. Now, time can actually be a lot simpler than you think, and it basically boils down to this, right? Forget trying to find the time down to the minute. Forget it, right? I've already posted videos where ICT blatantly says you cannot time anything down to a day, a week, or even an hour. Okay? But I would slightly argue the fact, because I do think we can get time down to the hour relatively accurately. So the way time works is you'll be waiting for the liquidity sweep or purge, okay, to happen in a kill zone. So that's the bigger fractal, okay, is the kill zone. So we'll be looking for the New York kill zone, for example, which is one of our favorites. Then in the New York kill zone, how would I know when to look for this to happen? Very simple. Everybody overcomplicates it. The economic calendar. Is there news today, yes or no? That's the first question you should ask. If the answer's no, it's very simple. You're looking for the high or low to form around 9:30. Okay? Now, just because I'm saying 9:30, people take things very literal. It doesn't mean that this one candle here is going to happen at exactly 9 o'clock and this candle will be 8:59. That's not how it works. Okay? You need to understand that when people give times, dates, these models like so clean, it doesn't always mean that it's going to happen on that minute, on that day, or that model's going to be this clean, right? Don't take things so literal. You have to learn to adapt. You have to learn to be slightly vague when it comes to trading, right? Nothing's ever perfect. So what can happen is two things. This could be 9:30, this could be 9:45, this could be 9:20, this could be 9:15. Okay, but we say that this is 9:30 no matter what time it is. This is the 9:30 SMR, even if it happens at 9:10, even if it happens at 9:50. Okay, it's still the 9:30 SMR. This is what people need to understand. That's on a non-news day. Okay, is the news today? Yes or no? Yes, there's news today. Okay, what time's news? Okay, time's 8. The news today is at 8:30. Okay. Now we're looking for an 8:30 manipulation, right? So we can anticipate an 8:30 SMR or manipulation. Does that mean it'll happen at exactly 8:30? No, it doesn't. I'm going to show you ways to anticipate the exact time within an hour very shortly. So it's very simple. Trading is very simple. It's too many people overcomplicate it. They make it very difficult, right? It's very simple. Kill zone first, okay? New York kill zone, right? AM. In that kill zone, how can we narrow down that 4-hour kill zone into something a bit more realistic? Okay, because kill zones also can be different through different educators. Okay, some people say 8 till 12. Okay, some people say 7 till 11. Some people say 9 till 11. Right? There's no right or wrong answer. Nobody's right, nobody's wrong, right? Nobody can tell you what's different, right? ICT set his time zones for a reason. Obviously there's a reason for those. I use slightly different because mine is 6 hours, which I can show you an example of after. But I do basically narrow them down to, if there's no news, 9 till 11. That's my New York kill zone. Okay. If there is news and it's an 8 o'clock news, 8:30 news, then my kill zone changes slightly and it extends and it goes 8 till 12. Right? So if there's news in between, if there's any news on that day, should I say, let's make it simple. If there's any news on that day, my New York kill zone is now 8 till 12. If there's no news, it makes it a lot simpler for me because it's 9 till 11. That's just my preference. I'm not saying that's right. I'm not saying that's what you should do. That's what I do, just to make it simple.
I hope people are paying attention because, of course, we're just stuck on this one image for now, and it's a lot of talking, of course. So people really need to take time to appreciate what you're saying because you're dropping so many gems already.
Well, that was the plan, mate.
Yeah, of course.
Without
opening some eyes.
Without you probing me like the last webinar. You were definitely getting your money's worth out of me on that one, mate. Right. So back to the model. We'll come back to time, don't worry, but that's the basics of it, right? Coming back to the entry model, I hope you all understand this logic, right? There's a real logic behind this. It's not a pattern. There's an algorithmic price level right here, right? And as Zeus says, this, guys, you have to understand, this happens every single day, every day. Not maybe 3 times a week, every day, every single day, right? For those of you that say, I couldn't find an entry or whatever, I understand that you're new, and yes, that's part of the process. But guys, listen, this, I don't care what anyone says, this happens every day. Every single day, at every single liquidity purge, this happens. This model presents itself, maybe not as clean, maybe not identical, but it's there. And it has to be there because when this occurs, okay, there's an algorithmic price level. And when there's an algorithmic price level, there has to be a unicorn model. It has to be there. It's the signature of exactly what's happening, and this gives you the heads up, right? Now, for those of you that have known me a little longer, you will also know that even if your bias is wrong, right? So even if you get your bias wrong, okay, because you're new, if you are new, you should be setting goals small, right? You shouldn't be aiming for 20, 30, 40 handles, right? Or pips if you're trading Forex. This works on anything, by the way. Works on Forex, crypto, anything. Anything you can trade, anything with a chart, this will work, right? Across the board. Even if your bias is wrong, this will guarantee you 5 handles, right? There's a very specific reason, right? It's actually 4.5 handles. I shouldn't have said that, but it's okay. Let's say 5 handles. Hope you're listening. This will basically pull you 5 handles. Even if your bias is wrong, it'll always take out the nearest intermediate term low or short term low to the left, which should almost guarantee you 4.5 to 5 handles here, right here, in a matter of minutes. And if you noticed, most of my videos, this is all I do. I don't care about people say, Rich, why did you get out there? Why did you not take it? It went 50 handles. Guys, I honestly don't care. I never once come back to the chart and say, oh, I'm gutted it went 100 handles. I don't care, because listen, that 100 handles is not guaranteed, right? That was mainly luck. Yes, you can have your draw on liquidity, but it doesn't. We always know the draw on liquidity is going to get hit, right? Some of us, we are at that level where we know which draws are going to get hit. But the point that I'm trying to say is, it doesn't mean that it's going to hit in that session. It doesn't mean that it's going to hit on that day. Nobody knows that. ICT's already said you can't explain or foresee a time when the drawn liquidity will get hit. If you can't see a time or predict a time when the liquidity is going to get hit, guess what? You can't tell the time that an SMR is going to occur. Because if you can't tell the time that a drawn liquidity is going to get hit, what happens after that? Okay, you either get a continuation or an SMR. It's not possible.
It's always one of those two.
Yeah.
That's what people need to understand. And I think that's one of the beauties about what you just explained, is that you're not trading to impress others. You're not trading to get those high RR trades or whatever, those really large runs. You're just trading the moves that you know occur every single day, every single week. And that's what matters. It might not be fancy, it might not look cool, but it works and it repeats. That's the thing. Who cares if the market moves 100 handles and you only took a small portion of that? At the end of the day, it's about making money, not impressing others.
Yeah, mate, and this is why I'm coming to the point that in my videos recently, everyone will know that I just don't take the turtle soup. I'm not trying to enter on these wicks anymore. Zeus can tell you, I had a personal conversation with Zeus, and I was like, Zeus, my win rate's gone down. I'm not happy, right? And Zeus is like, why are you even trading like that? Like, you know the best entry, right? You know the best entry model. Why are you trying to soup? Why are you letting your win rate go down? Because guys, listen, although this is CSD, and there's educators out there teaching CSD, and there's educators out there telling you once there's a close above the order block to enter, right? Other people aren't even waiting for that. They're literally trying to enter on the wick, which is something that, look, Zeus can clarify, I am capable of it, right? And I am capable of doing it to a profitable standard, right? But listen, guys, if I'm honest with myself, guess what? Right, here's some truth for you. I was showing off, right? That's it. I wasn't doing it to make sure that I'm making money. I was too busy thinking about how good my Twitter video will look, right? Or to prove that I'm one of the best traders, because I want to be one of the. I'm not saying I am one of the best traders. I aspire to be one of the best traders, right? That's one of my goals. But guys, listen, turtle soup entries. Yes, I love turtle soup entries. Turtle soups are powerful. They are. But don't trade them. let the idiots trade the turtle soups, right? And if you do trade turtle soups, I'm not saying you're an idiot, but look, what I am saying is, as a beginner or even as a professional, right, it's a fact, a mathematical fact, right? There's no arguing. If you trade turtle soups and you're entering, right, before this level gets broken here, right, this exact level, this is not guaranteed, this move. Trust me. I've backtested this hundreds and hundreds and hundreds and hundreds of times. I've traded it live hundreds and hundreds and hundreds of times. Zeus can be my witness. What did I say, Zeus? I said, Zeus, my win rate's going down, stressing me a little bit. And what was your reaction?
I literally told Rich to go back to what he knows to be high probable, because you need to understand that it's possible to enter in the SMR. It's possible, you can do it, because we anticipate an SMR to form. Yes, we know when it's likely to form. However, what you need to understand is that it's way more probable that when you wait for an SMR to form and then enter, than when trying to capture the exact bottom. And it might look cool on the video, it might look, whoa, look at that high RR that he managed to pull off there, or I don't really subscribe to R, but you get the idea, that you enter there on the bottom and say, whoa, look at that massive move that he took. Now, compare that if you would simply wait for all the confirmations to be aligned, because you need to understand, a low will not form there, followed by the signs that confirm a low formation, and the breaker setup, if all of those things are not aligned with one another. It's a sequence of events. It's step 1, it's step 2, it's step 3, it's step 4, it's step 5. All those things occur to confirm that a low is forming. While some people try to enter based on step 3, for example. Why not wait for those extra steps to be confirmed and then do something? It's a major difference there. It's just those extra confirmations, and look, you're still entering in a very deep discount. That's what you need to understand. As long as you're in a deep discount, you can enter wherever you want to enter. And that was one of the revelations that you had as well, Rich, right? That you just press on buy, for example.
Yeah, mate. Listen, you're in discount. You find an SMT, right? With it, even if you wanted to do it this way, you wait till you're in deep discount, right? You've took some kind of liquidity. You've purged it. You look for an SMT. You look for a confirmation SMT, and you can just enter with nothing. If you wanted to.
As long as your POI selection is on point, as long as you are able to see reversals occurring, that's what you can do.
Now, guys,
we move on to a real chart, Rich.
Yeah. What I do want to finish off is this, right? Listen to this, right? What does ICT say about a failed trade idea? Have a think about that for a second. He says you wait for 3 PD arrays to fail, okay, and you jump out of your idea, or you jump out of the trade. Do the opposite here. Think about what I just said.
Right, Bob.
For those of you that don't quite get it, I'll explain it very quickly. In this instant, you're waiting for 3 PD arrays to fail. So it's like saying to yourself, okay, 70% of the time I'll lose a trade, right? So what do? You say, okay, what would I normally do here? I would go short. Okay, so what I will do is actually I'll go long, right? In this circumstance, what you do is, instead of you're looking at a trade, you're in the trade and you're waiting for 3 PD arrays to fail to jump out of the trade, you're waiting for 3 PD arrays to fail to jump into the trade in the opposite direction. It's that simple. Now, we're going to go into the charts, but this theory here, now, I don't want to call it theory because it's a fact. It's not a theory, right? It's a fact. And I'm going to keep saying it until this drills into your head, because then you'll know how to be on the next level like the rest of us in TOTK. This level is an algorithmic price level that's predetermined before the session, and the algo already knows that we're going to react here.